Good day, traders. This is Stacey Burke from Stacey Burke Trading. Today we're going to be going over some more end-of-day trading tips for end-of-day traders. And what we're going to be reviewing today is peaks and troughs. In Module 1 we talked about candlesticks and bar charts, and we're going to be just using, for this demonstration, candlesticks. So what we're looking at with peaks and troughs are just an easy way to define the trend. So when we see a series of candles that are making successive, in this particular example we'll start off with a just in September of 2015 the market successively made lower highs and lower lows. And what we're demonstrating there is just looking at the bottom of the candles and the tops of the candles. And in each one of these situations, the market day after day was making lower highs and lower lows. And so we would tend to say in this particular case that the market is in a downward trend, or in at least the short-term micro trend, the market is definitely in a downward direction. So in a medium-term time frame, if we were to look at that last run-up where the market was making day after day higher highs and higher lows, inside bar I would ignore that. And then it made a 1 bar counter trend where a lower high and a lower low occurred, and immediately reversed back up in the long direction to make higher highs and higher lows until again we saw that reverse at that top. So if we were to take the medium term trend and define that with a low level, then a high where we saw again a 1 bar counter trend, so we saw the market make higher highs, higher lows. I'm ignoring outside bars and inside bars because the direction bar to bar hasn't really changed, it's consolidated. So we see a 1 bar counter trend here, and immediately the market went back into its higher high, higher low, and then again reversed and came down. So we would mark that off as a medium term peak. So in this particular situation, the market then made a higher low and a lower high, and then proceeded to go and make lower highs and lower lows. So we're looking at the medium term trend of where the market is breaking out, and I'm going to define a breakout of where it closes completely beyond the previous day's high or low, as opposed to closing within range, which for example we see this series of 3 candles right here, inside bar made a lower high, lower low, but it's all within the range of that larger candle. Market breaks out, does a 1 bar counter trend, higher high, higher low, and an inside bar, and resumes its downward thrust. This is a part of the original Dow theory approach of marking off trends and counter trends, and we're looking at just marking off peaks and troughs. So if we were to go back and just we'll scroll back on this chart. For example, we'll just open this up, and so we could mark a, I'll use the other marker here, once this big bear candle presents, we could mark that off as a medium term high. Although it hasn't completely broken out of range, that's a strong indication that the sellers have from that candle are still very dominant. The market then broke out down here, so we would mark that off as a low. The market continued to make higher highs and higher lows until this particular candle where it broke out, so then we would mark that off, and we tentatively have a downward thrusting market, so we would look to maybe re-enter a trend back in line with the original drive of the market. So again, just marking off peaks and troughs in the medium term and I'm using breakout candles to define those turning points, or a series of candles that may have gone into a range or accumulation or distribution phase, and then marking off those lower highs, lower lows, or higher low, lower high. So hopefully print off a bunch of charts, go back through yourself, start getting in the habit of marking off peaks and troughs. They're excellent in terms of recognizing potential changes in direction of the trend, and also distribution and accumulation areas, and of course areas where the market may be getting ready to make a large move. So hopefully you got some value out of today's lesson, traders. Again, print off a whole bunch of charts. Just get in the habit of marking off peaks and troughs, simple price action. We'll be talking about micro trend lines and timing, areas of timing of importance in looking at for where the market may be about to change direction or resume its original trend. Have a great day, traders, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.